Hi everyone. So I've been asked to explain a bit how I trade with this indicator called Algo Alpha, activity and volume. So I actually started using it yesterday, just as an added confluence to my analysis. So if you've seen other videos of mine on how I do my chart markup, uh, then you know that my intermediate time frame is the 15-minute. So let's do a market replay and go to the price action yesterday, Monday the 7th. So we see that um, where were we? Not here, clearly not in the New York. So let's go a bit further. No, that's not right. Let's go backwards. Here, yes. So this was before the Monday open on Monday, London open on Monday. So if we look at the range here, I was expecting to go higher on the week to take the highs here, but being a Monday, I was expecting for price to retrace and possibly form the low of the week. So looking at the chart now and also having this basically volume profile, I see that the largest transactions, the largest volume was around here. That in itself gives me an idea that if institutions have taken price from this level here to the highs here, they might want to come to bring price down to enter some more longs. So they fill their bags here, not enough because they have very large positions. Then they bring price back down to get a better price and re-enter long. So in that context, we also had the 4-hour breaker around here. That gave me additional confidence that price would trade down into this point of control, let's say. So what happened after on the open of the London session? I've taken that short, and there it goes. So yeah, so if you look at the profile here, it also kind of matches with the impulse range on the 15-minute, and that's on the settings. You can actually play around with it, but for me, the default settings were just fine. I just turned off some settings here. I don't actually need the look back period visualization and heat map. So fast forward, price touched the order block, the breaker block. We had retracement again into the highest volume areas. The logic is the same. So institutions fill the bag again around the areas where they initially started filling their bags. So they push price up to unload. Where do they unload? In the areas with the highest volume. You've seen that. So that was the area with the highest volume, point of control. They unload. Now a bit of indecision here. So if price at this point in time would form clear bullish flow, then price would have gone to the highs here. But yesterday I was also kind of expecting the possibility that price would go lower to take the lows here, because what happened, the lows here were Friday's time-based liquidity. So they push price down, they fill the bags, they unload again, and they look to fill the bags even lower. And so there you go. And you see, the volume profile adapts automatically to this new range. So we have this for our external range liquidity. And this was Friday's London low. If you look here at 3 a.m. that wasn't taken until now. So what does the market makers do? What do the market makers do? They bring price down, fill the bags again here. Of course, this was off hours already. Actually, yeah, you see there was a weak block. Asia traders manipulated all the way here into this weekly bullish fair value gap. But our point of control is all the way up here. So this is the area with the largest volume that has been traded. So we enter now into Tuesday before London, London opening bell being here. What did price do? It has taken this low 4 hours external range liquidity. That's Friday's London low price. We have this weak block. Price wicked into this weekly bullish fair value gap. And if you look here, as a retail trader, what do you see? You see inverted flag or wedge or whatever this might be called, and you think to yourself, oh, this will break to the downside, and your target will be this one, right? If you're a pattern trader, something like this, it will break down. My target is here. So we come to the market, and you likely sell on one of the highs here. So let's see what happens. So liquidity being created by the market makers. You see on the right hand side the volume profile, it actually increased, volume increases in this area. A lot of positions are being open and closed, a lot of trading happening. But at the end of the day, what is happening here? So a very big position is being created. Liquidity is being created by taking stops of traders on both ends of the range. So we had London opening bell. Okay, so here is where I was actually confident on my trade after the opening bell, because if you look here, what happened on the opening bell, price wicked down, taking all the stops here below the previous day low, we had this weak block, and I actually entered right after this candle around here, targeting the point of control. Now my stop was below the how do you call this, midnight open, on the premise is that if market makers want to push price up, smart money or whatever you want to call them, the algorithm, they want to push price up, they won't come down under the midnight open, and we also have the 130 open here. So I had my stop here, like so, and I was targeting this. So yeah, one money filling the bags here. Where do they want to unload? They want to unload here. We don't look at historic price action. We look at the impulse range, and our impulse range is this one. So inside the impulse range, where is the highest volume, where buy positions from here can be liquidated, and they can make a lot of money. This is the area. And this is current price action, and you see the volume profile changed after around here, I believe. Let's go to market replay. Around here. Okay, so let's go bar by bar. So around this point, just eyeballing the aggregated volume on the buy side outweighs the sell side. So that's a positive imbalance in price. If you think about supply and demand theory. So yeah, there you go. So at this point in time, the buy position of the market maker or smart money has been fulfilled, and price shoots to the previous POC. And in the fair value gap, this is a 4-hour fair value gap. In the fair value gap, there's actually no volume compared to everything else. So yeah, this would give a bit of confidence that price will go up even in the fair value gap. And this is when a lot of traders will get stopped trying to short. So no time-based liquidity, not a good idea to look for reversals, even if you're in a fair value gap. Yeah, so current price action, where the point of control is here, and we are pre-market, pre-New York AM market. At this point in time, I already closed my trade, and it's a good idea to wait to see where volume enters the market at the New York Open, because as you can see here, I think most of the position that was generated in London and in Asia, most of the position has been liquidated, I believe. I think they've taken most of the profit out of that position. So that's how I'm using this volume profile. I hope that that helps to clarify a bit. It seems to be a great tool to have as a added context to your analysis. Thanks for watching.